I'm Diane King Hall. Oliver Rennick will be back with you tomorrow. All right, let's widen things back out. We've got Thomas Martin, Senior Portfolio Manager, Global Investments, joining us as we wind down the show today. Thank you so much for joining us this afternoon. Let's start out with kind of the state of the land with this week, and let's go macro. What do you think is really going to be the focus for the majority of this week?
Well, it's like you guys have talked about. We need to focus on what's happening with inflation to get an idea of what the Fed is likely to do going forward for the remainder of the year. We do have one earnings report in Micron where the semiconductor stocks and NVIDIA and the AI plays really had accelerated to the upside, and you have seen in the last 3 days some correction going on there, which is perfectly natural. But we need to continue to see that there's evidence that trend is intact, that it's actually intact with real earnings and real sales and real projections going forward. And it has been from all the reports so far. So Micron will be the last one. So we'll definitely want to see both that and inflation coming down, continuing to have that trend downward.
Given that Micron is kind of the big focus when it comes to the few earnings that we have on the calendar this week, and then what we saw today with this turnover in tech will continue from last week, but NVIDIA and other big names as well rotated over. Could Micron, do you see it as a potential catalyst, depending on how it performs, to a rotation back into these AI-facing names?
If it is, it might be peripheral, because to a certain extent, the markets go up, they reach maybe some sort of unsustainable level for a certain kind of industry, like they have really for the semiconductor companies, and then they have to come back down to a more normalized level. But there really hasn't been a change in the fundamentals, and I don't expect that there will be, or that Micron will report one. It's just that you need to have a breather here and have the stocks get back to a level where people are more interested in re-upping and re-owning those, and you get the marginal buyer back in the market.
Do you see valuations on, say, the S&P 500 as too rich right now?
Well, yeah. Well, I mean, what you have with the S&P is that sentiment is very, very high. Valuations are indeed stretched. They're also very high, and you have a market that is overbought. It's just, it's up 15% for the year, and sentiment is high, and everything has been pretty good. There hasn't been a lot of negative news, so that kind of an environment is just right for a little bit of a correction in here. And fortunately, we haven't really seen it in the broader market. It's just been in that particular area, which has been very, very strong.
And then when you think about kind of what the expectation is for PCEs, like, a lot of this week is going to hang on that, and we don't get that until Friday. What does reading the tea leaves from recent economic data points tell you about what you're expecting to see from the Fed for the balance of the year? And we do have some Fed speak this week. We had some today.
Right. And we've had a fair amount recently, all of which has been hawkish and which is focused on inflation. And if you remember back at the beginning of this rate rising cycle, when the Fed did get the idea that there really is inflation and that they needed to combat it, they spent several meetings, almost every meeting for a number of meetings, just stressing how important it is to get inflation right. And that's right up until the last meeting. So that's been message number one. But with rates at the level that they are, and then you have sort of slower issues, such as the amount of interest expense that we're having to pay, and the way that rises as some of this debt gets refunded. So to the extent that rates can be lower, it will reduce some of that risk. And the Fed hasn't said that that's what they need to do, but in kind of a rare moment of suggesting that the market wants to have a Fed or a decrease in rates to start that rate cutting cycle, Chair Powell sort of alluded to that there was one coming, just not sure when. He hasn't really gone back to say anything more about that. And so I think what you're really getting is in the tea leaves is there has to be enough time that the Fed maintains its credibility, but that they can start that cycle. So maybe it will be in September. Even the market is unsure of that. A 65% probability is
Yeah.
strong, but it's not a lock. But probably one by the end of the year gets the cycle going.
Yeah, I mean, yeah, when you look at the September probability, it's gone back and forth from being a coin toss to being a little bit more of that. So certainly one to watch, to continue to watch on CME Fed Watch tool. Thomas, we'll have to leave it there. That was Thomas Martin, Senior Portfolio Manager, Global Investments. Thank you, Thomas. And thank you all for